Can you really use life insurance to create a tax-free retirement income? So you've probably heard somebody say that online and thought, yeah, right, sounds like a scam. But the truth is, there actually is real strategy behind it. And today, I'm going to explain that very plain and simple. So this video is for the person who's working hard, trying to build their future, and they're realizing something. A 401k might not be enough, Social Security might not be enough, and retirement is getting more expensive every single year. So the question becomes, how do you build income later without being crushed by taxes? First, you need to understand one thing. Not all life insurance is the same. Some policies are designed to be temporary, like term insurance, and some policies are called to be permanent and build something called cash value. Cash value is basically money within the policy that can grow over time, depending how the policy is structured. So instead of just paying for coverage, you're also building a financial asset. Now the question is, why would somebody use life insurance for retirement? Simple. Because when structured correctly, cash value may be accessed later through withdrawals and policy loans. And in many situations, that money can potentially come out in a tax advantage way. That's why people call it tax-free retirement income. But I want to be careful with that wording, because it depends on how the policy is built and it depends on your situation. Here's the simple version. You fund the policy consistently over time. As the cash value grows, it becomes a pool of money that you can access later. So when retirement comes, instead of pulling from a 401k and paying taxes on every dollar, some people use policy loans to create income. And the reason that matters is because you're not relying on the government to determine your tax bracket later. Here's the biggest advantage, in my opinion: control. Most people don't realize that retirement isn't just about saving money, it's about how much you keep after taxes. And if your tax rates go up in the future, your retirement could shrink without you even realizing it. This strategy gives some people another bucket of money that can be more flexible. Now I'm gonna keep it real, because this is where a lot of people get misled online. This strategy is not for everybody. If the policy is not funded properly, it can underperform. If you take too much money out too early, you can damage the policy. And if the loans aren't managed correctly, the policy can lapse, and that can create tax problems. So don't let anybody sell you a fantasy. And like any tool, if you use it wrong, it can hurt you. So Peter, who is this actually good for then? Typically, people who want long-term protection and long-term growth, people who are consistent, people who want more control in retirement, people who are serious about building a plan. This isn't a get-rich-quick move. This is a build it slow, build it right move. If you're watching this and you're curious, this is what you should do. Start by asking, do I already have cash value life insurance? How is it structured? Can it realistically support retirement income later? What's the funding strategy? Because you can't guess your way into retirement. If you want me to break this down for your situation, comment retire below. No pressure, no hype. I'll show you what this looks like and if it even makes sense for you. Because the goal isn't to sell you something. The goal is to build a plan that actually works. If this video helped you, hit subscribe, because I'm gonna keep breaking down financial protection and retirement strategies in a way that actually makes sense. I'll see you in the next one. God bless.